Okay, folks, welcome to the Contrarian Trader. This is Bob Desmond, and this is our Wednesday's member stock pick request video. This is where we review the symbols that my members submit for me to review on video for them. It is part of their service. Let's kick it off with a review first of the health of the market. What happened today? Well, I have in front of me the NYSE Composite Index. I normally don't speak about it all that much, but there's something to be said about this chart, because while we have the S&P 500, the Dow Jones Industrials, and the Russell 2000 trading at all-time highs, we had a breakout point failure on the NYSE on the 25th. We broke out on the 24th, closed above resistance, and then subsequently failed, and we've pulled back. Not much has been said about this pullback. We did rally off the lows of the day, still closed lower, and we have lower highs on the RSI. Down volume has been rising of late, but still is below average. So this is not an alarmist observation of the NYSE. It's just a concerning observation, the fact that we have the S&P 500, Dow Jones, and the Russell 2000 trading at all-time highs, yet the NYSE cannot hold a breakout. That is your old stock market. What do I mean by that? That's your transports, the transportation sector, your basic materials sectors. They can be found on the NYSE and the Amex as well, but note how they are being held back. And what do you have propelling the markets higher? It's your pop culture names, Facebook, etc., Netflix. Let's move on. What was the proximate cause of the day's weakness? I would argue, as I did this morning, early this morning, I put together a quick video to members with regard to the weakness overnight in the currency markets. We had the U.S. dollar rallying to highs not seen since January versus the euro. Now, the euro, the FXC, has broken down to lows not seen since the summer of 2003. Now, this is by design. And we knew this was coming because after we had this precipitous drop in the FXC, it rallied back for a couple of consecutive weeks, a dead cat bounce, short squeeze, whatever you want to call it. We had topping tails, and that was a sign that this was a short-lived rally. We knew that the Greek issue would be kicked down the road, and by virtue of the fact, despite what CNBC says, by virtue of the fact that Greece stayed in the EU, it would mean weakness for the euro, not strength. Despite what the pundits want you to think, it's because Greece is like a dead weight on the balance sheet of the EU, which is why Germany likes them. In the EU, it's because it allows for German exports to be more affordable by them having a weak euro. It's all by design. This is a currency war. And it's only going to be a matter of time, and I'll get to it in a few moments once I start talking about some of our commodity names that our members submitted. It's only going to be a matter of time before the Federal Reserve decides who are they going to side with, the FX market or the stock market. And if you listen to the number of companies that came out, the multinationals last quarter, and complained about the strong U.S. dollar being the proximate cause of why they either had to A, miss earnings, or B, reduce forward-looking guidance, or C, both, they blamed it on what you're looking at. Here's a daily chart of the U.S. dollar. We are near multi-year highs. And I think that we're going to break out higher. And this is not going to be good for the stock market. This is why every time I see a slight breakdown in one of my stocks, I'm out. Even if it means a small loss or a small gain, I am out. Building cash, looking to short this market. Okay, so let's move on to our member stock picks. Okay, the first stock up, it goes out to fellow member Christopher. This is Facebook. He had asked me about it earlier this morning, so I figured I'd just tack it on to the member stock picks because the chart looks good. It's overbought on an intraday basis. If you take a look at an hourly chart, it's dancing on top of the upper band of the Bollingers. So it's probably going to get a pullback tomorrow. However, the bullish engulfing today off of support was quite impressive. We are at resistance. We need to see a breakout or a pullback to this lower band of the rising uptrend channel, and then you can look to get long. RSI, double bottom setup, poised for a breakout, looking good. Volume, above average, very, very good, very bullish. Look at the double bottom setup here on Stoch RSI, very bullish. Slow stochastics, looping back up again. All this good bullish stuff, all the oscillators confirming. All we need is either A, pull back to a support level for a good risk-reward entry point, or B, a confirmation breakout above resistance, or both. Ideally, you get both. You buy a portion of your position down here. You build on a breakout. ALTI, Altair Nanotechnologies. This is an OTC stock. I know we don't go over them, but the chart looks really good. We had a great bullish engulfing of yesterday's move today. A breakout on RSI out of this prior pennant formation. All the oscillators look really good, and the stock looks poised to want to head higher. And if I do trade any of these stocks, folks, I do send out alerts to our members. So Altair is looking very, very good. SRS, this is the ProShares Ultra Short Real Estate Fund. Not for the faint of heart, very, very volatile. That being said, this is a weekly chart. And the reason why I'm going over weekly chart is because it's been a long-term downtrend, as most bear funds have been. And you can see back here in late January, we tagged the lower band of the Bollingers, flashed a bullish key reversal, and then it was off to the races. Good volume, well above average. The ETF is under accumulation. So it looks poised on a weekly chart to head higher. Now on a daily view, we have the RSI making higher highs and higher lows, all good stuff. Price action, higher lows. Draw your trend line from the trough to current support at the lows seen on March the 2nd. And we saw a bullish key reversal off of this center green line here in the Bollingers. That is your 20-period moving average. We closed above the 50-day moving average. We look poised to want to head higher. Volume is very good. It's under institutional accumulation. So I think this ETF heads higher in the short term. Crocs, CROX. I went over this one last week, and I mentioned that it was finding support at the lower band of support here. We drew our resistance level along these topping tails, and today we had a breakout. Now, we are trading above the upper band of the Bollingers, which in and of itself is no reason to go selling a stock. Because what I think is going to happen here is you're probably going to get either A, a continuation pullback for another day, or B, you're going to get a pullback and a retest of what was resistance should be now support, this line in blue. If it holds that support level, I would be a buyer. I would wait for that event to occur. Really good volume today. It's under accumulation. I think Crocs heads higher. PLUG, Plug Power. All right, we have a failed breakout here. It was in a rising uptrend, short-term uptrend, and we're seeing this across the board. I've been stopped out of a couple of trades in the past couple of days because we had a breakdown below the lower band of support. I'm telling you, if it looks poised to close down below this short-term uptrend line, I'm out. I don't wait for the next day to see whether or not it's going to bounce back. In all probability, it's not. So if you had that discipline, you would have been stopped out back here, maybe on the 25th, the latest on the 26th, and you would have avoided this move downward. Now we're retesting the more extreme and probably more defensible primary uptrend line, the lower band. Will it hold? We need to see some bottoming action, a nice bullish key reversal like you saw here. A sign of support, a sign that buyers are willing to come back in and defend the support level. We're not seeing it yet. We're seeing a breakdown on RSI. We're making lower highs, lower lows. So I would not be a buyer at this point in time. I would avoid it. The only bullish thing I could say is that it's at support. Hopefully it holds. And you don't want to hope when you should fear. You want to see some bottoming tails. Then you can begin to hope. The other bullish sign is that your down volume bar came in lower than we saw on the 3rd. Sirius Satellite Radio, another one I went over last week. All right, we were in a flag formation. I said to buy it on a breakout above the upper band of resistance. We've had our rally. It tagged the upper band of the Bollingers, pulled back. Now we flash an inside day, meaning no new high, no new low. You're probably going to see a continuation pullback. I would look for a defense of the 390 level. Watch for a bottoming tail, maybe a couple of days worth of bottoming action, and then you could look to get long. I would just warn you that while we had a breakout on price, RSI broke down and is not really confirming this new high. This is not pretty. Stoch RSI, very choppy. Oscillators are not really looking all that good. You have a lower high on the slow stochastic, possible double top in green on the ADX, possible double bottom in red. You're going to need to see an orderly pullback and bottoming tails before you decide to get involved with this trade, and then I would use a stop loss if you fall back down into this flag formation, because if it breaks back down into this flag formation, in all probability, you're going to break the support level and head lower. Rosetta Genomics, ROSG. This wasn't an easy one. Very, very volatile stock. It's in a triangle formation. Listen, I'm going to keep this simple. You can buy it along this lower band of support. If you close below $3.30, you need to get out. If you break out, you can look to add to your position. And that's how simple I would really need to keep this. I don't like the lower highs on slow Stokes. I don't like the lower lows it made as well. It broke down below a key support level. If this stock was going to head higher, we should have seen these Stokes hook up and make a higher low. So once again, you can nibble here, stop loss just below. If you get a breakout and a close above this upper band of resistance, then you look to add to your position on a closing basis. It's got to close above this upper band of resistance. PRKR, Parker Vision. It's in a flag formation. Good bullish key reversal off of this prior support level. You can add on a pullback and a retest of 92 cents, or you can wait for a closing breakout above this dotted line, this upper band of resistance. Possible double bottom setup on the slow Stokes. Really what matters here is price action, and it needs to show strength. What I like also is the fact that your Bollinger Bands are so very narrow, and you could get a Bollinger Band squeeze, which would be very, very bullish. SOL, ReneSola Limited. Okay, RSI in a pennant formation, no breakout, respecting the lower band of support. Pennant formation on price. We attempted to break out today. No success. We do not want to buy prior to a breakout. The only time we want to buy is on a pullback and a retest of the support level. We nibble there. We then add to our position on a successful breakout above this upper band of resistance. I would not buy into resistance. The odds are not in your favor just yet. Good volume today. Making higher lows and ultimate oscillator, double bottom setup. Looks good, but again, you want to get either a pullback and a retest of support or a successful closing breakout. Then the risk to reward ratio is in your favor. ITKG, Integral Technologies, OTC stock. It's in a trading range, obviously. I wouldn't be a buyer of this stock until you get a pullback and a retest of support with a stop loss just below this support level, or you could wait for a breakout above this resistance level. However, keep in mind that you do have more resistance above here. In this box, there are buyers that held through this hell that they went through, and now all they want is for this red entry, which is called ITKG on their brokerage account statement, which is currently flashing green, and they don't remember why they bought it, and all they want is their money back. And the second that it turns green on their trading platform, they're going to press the sell button. So just be aware that you have overhead resistance above. Good bottoming tail today. Some buyers came in, but I would wait for either a pullback, retest of support, buy there, stop loss just below, then buy more on a breakout above, let's call it 67 cents on a closing basis. Dust. All right, this is a dollar play. This is the Direxion Daily Gold Miners Bear ETF. It's a leveraged ETF. It puts you 3 times short of, let's call it, the GDX. All right, very, very volatile, not for the faint of heart. I think in the short term, it's heading higher, but it's not going to be a straight shot unless we have a real serious currency crisis and there's a flight into the U.S. dollar, forcing the U.S. dollar higher, which will then push the gold mining names, gold down, silver down. That will cause this ETF to shoot higher. Keep in mind that you have your 50-day moving average, which is rapidly approaching. It's going to act as a declining ceiling for the ETF. Volume is fairly good over the past couple of months. Higher lows on slow Stokes. So I think right now with the dollar in rally mode, the gold miners are going to continue to get hurt. So Dust should do okay. I just wouldn't get over-levered. You have a lot of overhead supply here, which means that you have a lot of support below on the GDX. Let's take a quick look. And here you have it. Lots of support levels here, especially down here where we bottomed out. And we were long out of this breakout. So that's the story with Dust. Just be aware of the relationship of the ETF to the U.S. dollar. Once the U.S. dollar begins to weaken, you don't want to be around when that happens if you're long of Dust. WBA, Walgreens Boot Alliance. This is one strong stock. It's a very, very good chart, healthy chart. You can see how every time it tags the upper band of the Bollingers, it pulls back. I don't expect anything different now. Orderly pullback. It's flashing bottoming tails, which implies that it wants to move higher. But traditionally, that's not what you see. You see a longer-term consolidation, and it either retests the lower band of the Bollingers or the lower band of the rising uptrend channel, one of the two. So I wouldn't go selling it, but if you buy it here as a trade, I would use a stop just below the day's lows at 82.30. If it breaks down below that support level, it's probably going to come down and retest the lower band of support or the 20-period moving average or the dotted green line on the Bollinger Bands. So that would be your next entry point. But the chart looks good. I don't see any reason why the stock wouldn't want to go higher. Down volume dropped off considerably today, so that's bullish. DBC, the DB Commodities Tracking Index Fund. We were long of this ETF. We enjoyed the rally higher. It has since dropped back, and it is now in a consolidation range. Remember, the U.S. dollar is heading higher. That does not bode well for commodities. So I'm surprised that it is holding support here. But the question is if the U.S. dollar breaks out above the January highs, will the DBC hold this current support level? So if you're long, I wouldn't go selling right now on speculation that there's going to be a rally in the U.S. dollar. I think you ought to play the DBC for what it is. It's its own ETF and subject to its own price behavior. And as long as you continue to see a consolidation here, and especially if the U.S. dollar continues to rise and you don't get a reaction negatively out of the DBC, that's actually a contrarian indicator. That's a good sign. So watch the U.S. dollar. If the dollar continues higher and the DBC holds this trading range, you could stay long. If you begin to break out in the face of a rising U.S. dollar, that means that there is more demand than there are sellers, and it wants to go higher. Now, the oscillators are a completely different story. Ultimate oscillator, choppy action on Stoch RSI, lower highs and a breakdown to a lower low on slow Stokes. But all that negativity being said, you see that quite often when you have a trading range. So what matters most when you're in a situation like this, you're trying to decide what you're going to do with a stock and ETF. You're getting mixed signals from your indicators, oscillators, whatever you want to call them. What matters most is price and volume action. Forget all this stuff. Worry about your price and volume action. As long as your support levels hold, you remain long. If you get a breakout, you buy more. Keep it simple. Don't over-rely upon these tools. They're simple tools. They are not what should be dictating your trading behavior. They only should support your rationale for making a purchase or shorting a stock. Next stock up is Hercules Offshore, HERO. This is a tough one, okay? This sector has just been beaten to death. This is a daily chart, and really, in all fairness, we need to take a look at a weekly chart to appreciate the damage that has been done to this sector. Now, the month of February was just horrible for Hero. I mean, really horrible. It dropped back down below or tagged the lower band of the Bollingers. This month we have a dead cat bounce, a reversal going on. I can't say to buy this stock. It really needs to heal. And the way you know it's healing is that it's trading sideways. It needs to build a base, much as what you saw here. It needs to back and fill, let it rally, let it pull back, let it put in a higher low or a double bottom setup. Right here, you flip a coin, which way it's going to go. Really, that's what you're doing if you make a directional bet on this stock right now. Flip a coin, and that's as good as trying to interpret any of these charts right now. The path of least resistance remains down. That hasn't changed. And I may be a contrarian, but that I do not ignore the fact that the trend is your friend. And when you're taking a look at this consolidation range here, we tried to hold 68 cents. We broke down below it in the back half of February, rallied back to recapture that support level on March the 3rd. What happened today? It failed and broke down below that support level and broke back down below the prior upper band of its rising uptrend channel. In all honesty, I think it goes lower. Could it gap higher? Could it move higher? Sure it can. Again, flip a coin. I don't think this is one that you want to really toy around with, long or short right now. SALT, S-A-L-T, daily chart, a nice rally. I think this is a stock that wants to push higher. It's tagging the upper band of the Bollingers. It's pulling back, flashing bottoming tails or bullish key reversals. This is beautiful stuff. This is a sign of some really good institutional demand. I didn't even need to look at the volume bars. The candlesticks are telling us that every time we get a pullback, you have a buyer step in and bid the shares back up. I think SALT wants to go higher. I wouldn't fight it, and it's certainly not a short. Looks good. Garmin, I went over this one earlier in the week. I laid down a 20-30% chance that it would break out and close above this resistance level. It did so on the 2nd. So it pays not to be arrogant when you're reading these charts and say 100% these stopping tails mean that you're going to drop back down, you're going to break down to new lows. No, we don't do that. What we want to do is keep an open mind. Anything's possible. Probably a little bit of a short squeeze on the 2nd, but what happened on the 3rd? It broke back down into its base. Now, in all probability, you're going to come back down and retest this lower band. Can 49 hold? Sure it can. Would I buy it here? No, I wouldn't. I need to buy it at a better risk-to-reward entry point. Ideally, that would be down at this lower band of support. Down volume dropped down today, so that's pretty good. Now, I think what's going to happen here is that you're going to get a rollover on these slow Stokes. Look for a rollover or a double bottom setup. Very similar to what you had here, but probably on a smaller scale, and that's a good thing. And that could occur on a pullback to this lower band of support. And if you get a pullback and a retest of the support level on ever-declining down volume, hey, listen, I may buy it myself with a stop loss just below this key support level. Box, BOX. This is for fellow member Karen and for Jackie. Two of my very few lady members, and they both like this stock, and I happen to like it too. It's in a trading range. Keep in mind, though, that this stock is an IPO. It only IPO'd back in January. I think they have a lockup period, which expires in July. So check out Yahoo Finance for that lockup period expiration. That matters. So just keep that in mind. Now, we are in a trading range, as I mentioned. This upper band of the declining downtrend line is clear and defined. You saw it retest here. It pulled back. It confirmed support down here today. I would buy this stock on a breakout above this upper band of resistance. I think it wants to go higher. I like the name. Bank of America. I took a look at this one yesterday. I did a double take. I was surprised at how weak it was behaving, putting in lower highs on RSI in a triangle formation near the lower band of support, But the real dark cloud over this name is the fact that you have your 50-day moving average closing in on the 200-day moving average. That is going to be a negative event if and when it does occur. I'm not guaranteeing that it will occur, but there's a good probability that it will. You need to keep an eye on the 10-year yield. The banks trade with the 10-year yield. If the 10-year yield is rallying, so will the banks. If it's pulling back, so will the banks. It's just a correlation that can't be ignored. The higher the yield, the bigger the spreads on the bank's loans. So I wouldn't be a buyer just yet of BAC. If you feel the need to, scratch the itch. You could buy it here with a stop loss on a closing basis just below this lower band of support. But just keep in mind, this 50-period moving average threatening to take out the 200-period moving average. Use caution. Cliffs Natural Resources, weekly chart. This is ideally what you want to see on HERO. When I was annotating this chart, I was thinking about HERO, which I had gone over first. And here's a correlation. This is really, HERO is behaving now as Cliffs Natural Resources did back in December. However, it consolidated, rallied, pulled back, consolidated more. It's building a base. Now it's retesting the upper band of a declining downtrend line. I would call this your secondary downtrend line, because even though you've had all this consolidation, this is still a lot of damage that's been caused to this sector. If you get a breakout and a close above this declining downtrend line, it could be bought. It could actually be bought at these levels, but you need to use a stop loss just below this key support level. Expect it to rally up and into this upper band of resistance. You may want to look to stop out there, because you're probably going to get a pullback if you're just buying this as a trade. If you think the stock is going to go to $1 million per share, then hold on to it. But as a trade, I would be a seller into what I guarantee you is going to be resistance. I don't give many guarantees, but these guys back here who bought back here thinking that they were the smart ones in the room, and these guys back here are the suckers, now they're the suckers, and they're still sitting on with this stock. They want their money back. It's all psychology. It's no big deal. We've all been in the house of pain, and these guys are in the house of pain. They simply want their money back. So I'm guaranteeing that when this stock hits the upper band of its primary downtrend channel, you're going to see sellers move in. And it's going to pull back. I'm not going to say it's going to break down to new lows. You're just going to see it stall a bit. KOL, this is the ETF for coal. What can I say? It's in the government crosshairs. You have another year and a half or so of this current administration simply taking knives and sticking it every which way into the torso of this sector. I wouldn't be a buyer here. The path of least resistance remains down. If you drew a trend line down, the upper band of declining downtrend, we tagged it last week. We're probably going to break down to new lows. The trend is not broken yet. Now, if for whatever reason we pull back, make a new higher low, well, then maybe the story has changed and we'll revisit it. But as it stands right now, I don't see any change in the long-term story, and I especially don't see a change in Washington and at the EPA for the next year and a half. So I don't see any hope for this sector. I can't invest in it. I won't even trade it unless it comes down to an extreme oversold condition where I have a great risk-to-reward entry point. And looking at a daily chart in the RSI, we're nowhere near the levels where I liked it back here, where we were at extreme oversold levels on RSI, and we flashed a bullish key reversal off of the lower band of the Bollingers. That was your buy signal. We're nowhere near that type of risk-to-reward entry point, so I would avoid KOL for now, and it could even be a short. Mass Therapeutics, MSTX, it's a good little chart. Great W formation here. Here's your left side of the W, your center point at 62.9. Here's your right side of the W. Now we're threatening to take out resistance. We closed above a secondary downtrend line today. I think the stock wants to go higher. Look at the rocket fuel in terms of volume. Double bottom setups all over the place on Stoch RSI, on Williams percentage R. The stock wants to go higher. Last stock up is CERE. Ceres Inc. It's a nice chart, but you're going to get a pullback. I put on 2 Bollinger Bands here. I use the standard deviation 2 in green here, and then for extreme overbought or oversold stocks, I use standard deviation 3. As you can see here, here's my settings. Now, if you get a standard deviation 2 and you have a stock that's dancing on top of that upper band of the Bollingers, you should be concerned if you're long, because you're probably going to get a pullback. Now, when you have a stock that is leaning into the upper band of a deviation 3 Bollinger, you can bet this stock is pulling back. It's not breaking down to all-time lows. It's probably going to come back down and retest the lower band of the rising uptrend channel, and then you could look to add more. But just expect a pullback. Guaranteed it's coming, and it's going to come soon. But that will be your opportunity to buy more or to open a position. And it's certainly not a short if you're looking at the Bollingers as an extreme overbought indicator. That's not the way to use the Bollingers. Really good volume. Tremendous volume. This is institutional demand. They don't care about the Bollingers. They want this stock. So it's a good-looking chart. I think it heads higher. Just out of curiosity, let's check out the weekly chart. Yeah, the stock wants to move higher. It may get a pullback, consolidation for a couple of weeks, undoing this overbought condition. However, it's moving higher. Really nice. Really nice. Good luck with this one, and I may even join in myself. I just got to do a little bit of research. And that's it, folks. Members, if you have any questions, shoot me an email, and I will talk to you tomorrow. Be well.